Good morning, folks. Welcome to the daily report for the 29th of September. I went through quite a lot of the setups in yesterday's trading session, the live session yesterday on Tuesday. So there's not a lot to add, but I'll go through briefly the opportunities that lie ahead today and perhaps tomorrow, and give you a brief summary of what's happening with the euro and the pound. Let's start with the euro to start with, and you can see that the weekly direction for this week is clearly. Let me just get rid of this. It's clearly bullish. Last week's candle was a big bullish candle. Definitely had a higher high and a higher low, and we reached up towards this 200-week exponential moving average, and we've continued higher this week. So there's no dispute about the G7 direction for this week, and if we get the opportunity to buy into dips after a G7 signal, then we'll do that. If we have a look at the hourly chart, however, you'll see that we're a very long way above the moving averages. In fact, we haven't had a chance to buy dips for a long time. You can see, in fact, excuse me, going back as far as the middle of the month, the 14th of this month, was the last time that we were around these moving averages. And since then, we've been steadily moving higher and keeping well above the 200 moving averages. So no opportunity whatsoever to buy into dips, and we've just marched on higher up into those upper Bollinger Bands, constantly moving higher. We've had a few opportunities to go counter trend with bully trades, and we've had a couple of good trades over the last 2 weeks, but they've all been bully trades and counter trend trades, and this week it looks like we might be staring the same thing in the face. Right now we're up at around 35.90, 3600. If I just switch back to the weekly chart, you'll see that we're at a pretty significant level in terms of resistance, and I've drawn this black line right across the chart, cutting through these resistance levels. There's one over there, there's one over here, there's one over there, and we're approaching that same sort of level right now, just around the 136 level, which also happens to be a big round number. It also is a pretty significant Fibonacci retracement number, and if I put a fib from that weekly high to that weekly low, you can see we're around about the 50% retracement on the weekly charts. We've just poked through it on a weekly basis, but we've still got to see a close above that level to cement. Let's just zoom in a bit to cement really a weekly close above there to indicate that we might move higher. So as it stands at the moment, we've poked through it, we haven't closed above it, and we'll have to see at the end of the week whether we do so or not. So switching back to the 60-minute chart, I'm going to be looking for opportunities to sell the euro into a potential counter trend type scenario around 136, which is a key level. And as I showed you on the weekly chart, and I'll be looking for clues today for an opportunity to sell. Whether we get a bully trade or not, I'm not sure, but we might get a counter trend G7 signal. You can see the stochastics overbought. We're up at the 100 period moving average, and all I'm looking for now is some potential reversal signals, perhaps a no-brainer sort of trade, and perhaps a dramatic spike. You can see we've got almost what amounts to be a sort of a triple or a quadruple top going on right now. It's 20 minutes past the hour. Let's see how this hour closes. Looking at the pound weekly chart, we've got a pretty similar scenario really. You can see last week's candle on the pound weekly chart was bullish, higher high, higher low, clearly a bullish candle, and therefore we're looking to buy the pound into dips for proper G7 signals this week, and we'll have to wait until we get that sort of setup on the hourly chart. We've also been taking a couple of counter trend trades on the pound. One in particular yesterday was a 100 pip winner, and based on a bully trade, and like the euro, it looks like we're going to have quite a long wait before we get down to those moving averages. If I have a look at the 60-minute chart, you'll see that we're still well above those moving averages. Yesterday was all sorts of whipsaw going on. We were lucky to profit from that, and whilst we're stuck in this kind of range, this whipsaw range, probably the pound's not the best bet for a trading opportunity. So really, I won't be looking to sell the pound into rallies for counter trend whilst we're in this whipsaw range. You can see there won't be very much we can do whilst we're in here, but who knows, we might get a dip down to the moving averages, and or the lower Bollinger Band and some of the support levels for a G7 signal, perhaps later on in the week, maybe today or tomorrow or the next day. Who knows? We'll have to wait and see. But for now, I'm just going to sit on my hands with the pound and see what happens until we break out of this very messy range. So probably the best bet for trading today and maybe tomorrow is the euro, looking for a counter trend opportunity and looking to sell up into that 136 area near the upper Bollinger Bands and the big round number if we get a no-brainer type candle, or if we get a bully type candle. Other than that, not much to do. Remember, this week we're having the NFP Friday on Friday, so there won't be any trading on Friday, but I'll discuss more about that in tomorrow's live trading session and let you know all about the strategy for the NFP. But for today, looking to sell the euro into rallies, probably nothing on the pound, and we'll have to wait and be very certain that we've got a clear bully trade or a definite no-brainer reversal on the euro before selling. That's about the update, and I'll see you in a live session tomorrow. Take care, and good trading to you.